Hello, Maverick traders, and welcome out to your weekly currency room. This is Sankit here, and I'll be breaking down this week's price action and most importantly, taking a look at next upcoming week ahead. Let's get into it. There's a lot to unpack, so let's just quickly start with our broader market analysis, and then we'll take a look at currency relative strength and weakness by looking at the currency baskets, taking a look at major important news events, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So as we jump right into this week's recap, again, this was a big week. And again, we talk about how after Labor Day, volatility returns back to the markets. And boy, this was quite a week. And if you take a look at the markets overall, the biggest weekly drop in the S&P 500 since March 2023. So you can see this was a big down week. Looking back a month ago when we had a big down week when we had a lot of the events coming out of Japan, even that week was not as bad as this week. So something to really look into as we prepare for ourselves for next upcoming week. Now, we also had the U.S. bond yields that also plunged lower as well. So if you look at the economic data out of the U.S., it's been coming out a lot bearish. The labor data, the ADP numbers, you take a look at the NFP numbers, Joel's job openings, all that data is kind of coming weak here. And this is, again, reaffirming the upcoming rate cut. And I know this is where, you say, like, well, this is the news. We know that's what's supposed to happen. But yeah, markets are still responding because there is a big shift where not only we're looking at a 25 basis rate cut, which is imminent in a couple of weeks, there's some expectation that, hey, they might be cutting 50 basis points. They might be doing a larger rate cut. So that's really where a lot of this gyration in the market's coming from. But yeah, we are looking at a rate cut that's imminent in a couple of weeks. Now, dollar has the efforts flat for the week. But at the same time, we have to really dissect the relative strength and weakness because even though dollar was flat, but the biggest movements happened wasn't in safe haven currencies. So again, dollar is not really acting as a safe haven currency. But if you take a look outside of it, the yen really took off. We have Swiss franc that remains strong. So we are seeing the safe haven currency continues to play out here. So outside of the equity markets and the currency market, well, take a look at the crypto market. Same thing, sell off across the board. And we talk about how we just don't like crypto here, based on we're getting these big rallies in the last month. The crypto's not moving higher. It's just a relative weaker sign. And that's exactly where, when we are seeing a broader market sell-off, we're seeing the crypto's going down along with it. So pretty coordinated move across the board, sell-off, pretty negative week. Now, if you take a look at the schedule here, you can see that this week was important about the U.S. economic data. So I'll just quickly go over the other data here. Again, Aussie GDP that came out in line, flat expectation. We're looking at the Joel's job openings. This came in weaker. You can see the ADP number came in weaker. So, and then here we are, the U.S. employment report today. It came in below expectations. So you can see the unemployment rate didn't tick up, but we're seeing a same sort of trajectory here. The economy is getting weaker. And this is where we're getting a bigger down move in the equity markets because this is where, it looks like markets are more weaker than what markets are expecting. Remember the whole soft landing, that's what markets are prepared for. And now markets are pricing in a worst case scenario. So that's exactly what's going on. And that was moving the markets. But outside of that, you can see the Canadian employment report today that came out. That was actually weaker than expected. Uptick in unemployment rate, and there's jobs were less than expected. Remember, they're already in a rate cut cycle. Earlier this week, they cut by 25 basis points, but we're not really getting that big volatility out of the other currencies. And I think that's something we have to continue focusing on here. It's what's really moving the markets. And it seems like the big focus is really on the FOMC and the US rate cut. And we are seeing other rate cuts, but really hasn't triggered that kind of volatility. So I think as the floodgates open with the US rate cut, there'll probably be a lot more movement across the board here. So that's pretty much it. That's what we have across the board. It was a busy week as far as the news event goes. But let's just take a look at last week's review, and then we'll take a look at the numbers and see how things are performing and look at the charts. So jumping right into the numbers here, I mean, take a look at this. S&P down 4.32%, Q's down 5.82%. We've seen crypto down 5%, gold slightly down, oil had a big drop, about 8%. So you can see that this was an ugly week. Now here we are in the chart, and this is where we're going to take a look at, because we are in this broader range now. Remember, we are right up against the resistance, and this week, the entire premise was that, are we going to break out? And this is why it's very important to look for confirmations before getting long. And I was kind of waiting for that breakout confirmation that wants me to get long. But you can see, starting just on Monday, that it was a nasty candle. 2 days going sideways and another nasty candle down here. So we are still quite a ways away. If you take a look at the top and the bottom level, we still have a lot more room to drop. But in between these drops, I expect some sort of bear rally or some sort of basis. Exactly how we saw right over here. This is what I expect. Every time we see a big move, this is where big energy is expended. Then we get some sideways move and a big move down here. So this is what I expect. I think market likely to stay weak, but in between, there'll probably be bear rallies. There'll probably be some basis patterns there, but you just got to realize where we are, where we're heading. This is a lot different than what we were expecting going into this week. We were expecting going to this week that market's going to break out because, after a big sort of a rally from the bottom to the top, it looks like market just taking a little bit of a rest here, consolidating before going higher. Clearly not the case here. Something to pay attention to going to next week. We are shifted with the risk trends. Now we are more on the risk off sentiment versus the risk on sentiment. Now, if you take a look at the numbers, and let's just take a look at numbers in the currency markets, you can see that the yen, that was the big one, 3.22%. And again, this yen is moving along the lines with the risk trends. And again, I haven't seen yen move this way. Again, for the last 2-3 years, yen has been suppressed by Bank of Japan, but now it's really trading freely. And then when we're getting these big down moves in the equity markets, they're seeing quite a bit of movement in the yen. Swiss franc, you can see, was stronger, but nothing close to the yen here. So this clearly, yen is the biggest one. But remember, as the yen is moving wildly off this risk trends, that means that if there's a down move, it's Swiss francs likely to go down, likely to go higher. But then if we are getting an up move in the markets, I think vice versa, we will probably see yen pair gains a little bit there. So remember, now this is a risk on versus risk off trade. Remember, we used to talk about it. Now in between, we didn't have that risk on or risk off trade, and it looks like that trade is back. So you really have to pay attention to what the broader markets are doing. So going to Monday and Tuesday, if the markets start to bounce right away, even though we are pretty clear on where the trends are, we need to back off because that's what we expect some of that bear rallies to kind of come into. And as you can see that the Aussie and the Kiwi, they were the worst one. 1.62% on Aussie and 1.43% on the Kiwi. Of course, the Aussie is still underperforming, so that trend hasn't changed. We'll take a look at Aussie-Kiwi pairing, but nothing changed there. And I want to highlight that. Look at the middle here, euro and pound. This is not really moving much. And I want to highlight, there's a lot of traders that are trading pound or euro. I mean, I always recommend, trading currencies that are moving. Pound is clearly not moving. Euro is clearly not moving. So trade things that are moving. Even CAD did go down, but you can see that the CAD and the dollar were diverged this week. And CAD is, again, just weak off that weakness in oil. And then we're seeing the Bank of Canada cut rates. That's really where the CAD is. So it's not really kind of stuck in the middle there. So I think we probably just want to continue focusing on this basket here. I want to continue focusing on this basket here. Again, watch out for the dollar. That's the anomaly here because, dollar has a lot of things going against it. As we get the rate cut in a couple of weeks, probably after that, we'll see it settle down. But right now, clearly, Swiss franc and yen. So as the market goes higher, we'll probably see a reversal of that trade. And then as the market continues to weaken, they'll probably see a continuation of this pattern. Now, in the middle, we have the ECB rate cut coming out this week. So they're expected to cut rates. We'll see if that put pressure on the euro. But yeah, so far, going to the euro, I'm not really super bullish on it. We have the ECB coming up, which could really, dampen some of that could really break out of the range that it's really stuck in. Now, if you take a look at the crypto world, you can see that Bitcoin, again, main cryptos, they are down. Bitcoin Cash, Ethereum, and then the Litecoin, they're kind of flat. But really, when the big stuff is falling, that's really where all the weakness is. So nothing really to say different. Has been uninteresting to trade the cryptos here. Now, let's just jump into our market analysis and take a look at our scoring system and then take a look at where the charts are telling us. And based on the chart over here, you can see that we have gone from a +2 now to a -2. So big shift there in the broader markets. I also want to take a look at other charts. So here's a chart for the bond yields. You can see that bond yields, they're already weak. So in lieu of this rate cut, we are seeing the markets kind of already responded to it. And this is why I think market does a great job at pricing things in. It's not a big surprise. Everything is out, everything is expected. And that's why when the news event comes out, sometimes you see an opposite trade where it breaks down and it just quickly reverses. Why? Everything is all priced in. So then markets start to take profits around those levels here. So if you take a look at where we are, you can see that the last 4 days were brutal in the yields. As the markets are dropping, look at the bond yields were dropping as well. So we are looking at printing some fresh lows over here since last year. So I think this one probably stay negative or stay under pressure here. You can see that we are right back at that lows that we had set back in August. And again, break of that will probably open some further downside. Now here we are with the crypto, and you can see that this thing is just moving out of the range, going down. So nothing optimistic about the cryptos here. Either they consolidate or they break down. So you can see that this is coming off from a bigger consolidation. So I would expect a little bit more further weakness in the crypto markets here. Now let's just take a look at the schedule for next week. And as you look at the next week's schedule, it's lighter. Compared to this week, this was jam-packed. Next week, it's a little bit lighter. But here's the important ones. We have some data coming out of the pound. So we have the pound employment report, pound GDP. So if you're trading the pound or trying to figure out if the pound's going to break out one way or the other, probably would see some catalyst off of this data. Now, there is a couple of more data coming out of the US, which is the CPI on Wednesday. And then we have the PPI on Thursday. So you can see that CPI not expected to change. No real change here. I think right now, unless it comes stronger, we could see a bit of a correction. But I think overall, the markets are pretty set in. They're looking for rate cuts. The data is there. Even all the Fed chairs said it last, couple of weeks ago. Here we are. Other Fed governors are saying the same thing. So that's what's out there. This is already what's getting priced into the markets. But remember, we have the ECB that's like to cut rates on Thursday. So, maybe this will be a good trade to take, especially if the Aussie and the Kiwi, they all had big moves down. If they do take a break, maybe that's where we'll probably see. It'd be worth looking at Euro and the pound, which really didn't move much this week. But perhaps we can take a look at some movements going to next week. Now, looking at our next week outlook, I think market likely to stay under pressure. I won't be surprised if the markets sort of base a little bit or, maybe put a little bit of bounce. But that's really where we are at. And remember, the following week after that is when we have the FOMC and the rate cut. So probably see some further weakness there. But yeah, definitely under pressure. We have the ECB that's due on Thursday. So we're taking a look at it, 8:15 a.m., planning to trade around it. But, just keep in mind, Euro is not the strongest trending currency right now. But again, we're looking for a breakout one way or the other that give us that catalyst to move higher or lower. Now, economic data, again, the only thing that I'm looking for outside of the pound data is the US CPI and PPI. So if you're expecting any relief rallies, that's really where that's really where it'll come. But if they come out states as expected or even come weaker, then again, I likely to continue on with the same sort of direction that the bond yields and the markets are moving in. Now, let's just do our currency analysis here. And let's just take a look at things one by one as a currency basket and set up our expectation here. So I'm going to cruise very quickly through the crypto markets here. You can see that the cryptos, Rob said it too, not really the best place we want to be. But you can see that the scoring is very similar. Trend is 2 and velocity is 3. And you can see the same thing happening across the board. So Bitcoin now sprinting, getting back to the levels that we were at in the early August lows. And I think at this point wants to go lower here. Looking at the theory of Bitcoin Cash, looks similar. Looking at Ethereum, they're all breaking lower. So nothing different here. The only thing is really holding in there is Litecoin, but I'm not going to sit and trying to figure out why Litecoin is better. I mean, just the crypto as a whole, it's not the best place to be. So, we can kind of put the Litecoin here on the shelf. Now, let's just take a look at currency baskets here and then take a look at some velocity and the trend score. So let's just start with the US dollar. So remember, dollar had one of his biggest down week a couple of weeks ago. And you can see that since then, it's just trying to put a very anemic bounce. Remember, this weaker the bounce is, the likelihood for it is to break lower. You can see that this thing is still below the 20, below the 50. Nothing really has changed as far as the trend goes. Both the dollar actually looks weak. But you take a look at it today, because on that big risk-off move in the markets, we saw the dollar climb higher. And a lot of that move was really in that Kiwi dollar and in the Aussie dollar is where that big move came from, even dollar CAD. So really sort of a mixed picture, because if you take a look at dollar today, you can see yen is down. Against the Swiss franc is down. But then if you take a look at amongst other currencies, and that's actually up quite a bit. So that's why we're getting a mixed picture here. So that's really where the dollar is. Now, if you take a look at the yen, and let me just spend a little bit of time here on the yen here, because look at that. Here we are right at the resistance. And this really came to my surprise, because remember last week when we got together, as we look at the price action, this thing was trading range bound for the entire 2 weeks. I mean, since the August move, this thing is going sideways. So if you take a look at the last 4 days, 1, 2, 3, 4, they're quite bullish. It almost like the yen was preparing for a big drop in the markets. And again, that came along with that too, because if you take a look at the price action on Tuesday, was pretty bearish. The only difference is that then it just continued running into today. It didn't take a pause as like equity markets did. So there's definitely a lot more strength underneath in this yen here. And remember, yen has a lot more ground to sort of recover. In the last 2 years, yen has depreciated quite a bit. So we expect some of these wild numbers to continue. It's the same way if you look back in 2022 when everybody was cutting the raising rates and the Bank of Japan did not. You could see similar kind of price action where it looked like overbought and it just continued running. And maybe that's a continue oversold and just continue running. That's just the way price action was moving. And I'm seeing a very similar thing here. Now, if you take a look at the Swiss franc, kind of doing the same thing. Again, not as bullish as the yen, but it's still up there. So again, if I have to be really trading it, I'd rather trade the yen over the Swiss franc. So Swiss franc kind of goes on the side on the sidelines here for me, because I clearly have better things to pick as far as the outperformer goes and as far as the underperformer goes. Now the euro, this is one that I want to talk about, because take a look at it. We are right at this support, making a little bear rally. Again, this is setting up very nicely for a failure as we get the ECB rate cut on Thursday. So the trend score is a -2. Don't really love the euro here. And that's really where, velocity is kind of holding up there. But going to next week, remember, that's the next focus is really going to be for the markets, is for the central banks. So like the euro on the short side here. Now, let's talk about pound here. And remember, I said it earlier, don't trade things that are not moving. Pound is one of those currencies. It's not really moving higher or lower. So it just stuck sideways. So here we are in this wide range, or smaller range, but we are off the highs, below the lows here. So next week, as we get the GDP or the data from the UK and the employment claims, we're likely to break out one way or the other. So that's exactly what we're going to go for, is a breakout. Is it ready yet? No. So this is going to go on the shelf as well. Now here we are with Canada. And you can see that this thing is just making smaller bounces here, another small bounce here. This thing likely to break lower here. Again, we're making a lower high and a lower low. So at this point, we'll see what happens with the CAD here. The way it's setting up, it looks like it wants to break down. So the trend score is -3, velocities is negative. That's where relative weakness is. Now, Aussie. Let's talk about Aussie here. And I know Aussie was very similar to how the British pound was. It's just stuck in the range, and you can see that right away. You get this big, bearish engulfing candle here. You can see how things just turn around pretty quickly here, and then it just continue moving lower. So we are seeing the Aussie crumbling up under this pressure from that risk trend. So I think that's really where the weakness is likely to continue. Taking a look at velocity is down as well. So Aussie, and especially if the market stays weak, I would expect this to weak. If this bounce, maybe next week, if the market bounces, I won't be surprised that we start to get some bounces in some of these currencies as well. So remember, you're playing the risk trends, and that's where volatility comes in play, and you have to be very, quick decision making because things can change pretty fast. Now, Kiwi is stuck at the 0 here, but you can see that Kiwi is now slightly moving lower. I give it a 0 because it's right at, you can see it's just right at those moving averages there. If this makes another base and breaks lower, I think there'll probably be further downside in the Kiwi as well. And again, we're seeing the Aussie continue to underperform. I won't be surprised that Kiwi gets pulled along with it. And you can see that in the velocity scoring system here. Got a big drop here. So just like how we got this candle, a big drop, maybe a base, maybe an inside candle, that probably continue going lower. But as far as our trend score goes, I mean, it's pretty clear. These things are in the middle, meaning that this is what we are undecided about. Pound, not sure. Whether or when it breaks out higher or lower, we want to trade it. But till then, let's put it on the shelf here. Kiwi, again, right on the borderline here as well. So depending on which way it moves, we'll move on that as well. So our focus is really going to go into what's moving. On the stronger side is the yen and the Swiss franc. On the weaker side, it's actually quite a few. We have CAD, dollar, euro, Aussie, 4 currencies. So all these currencies comparing against the yen and the Swiss franc is really what we want to take a look at. And for the pound and Kiwi, we can take a look at the possible case scenarios, certain levels to watch. But I also want to highlight that this is a big week. So a lot of times, these bounces comes in play. And if that comes, I won't be surprised in the shorter term, you see the velocity in the yen and the Swiss franc to go down, and some of the velocity of these currencies go on the right side. So just like what we saw 4 weeks ago in early August, when we had a big move and big reversal, and then we had that moment, that couple of weeks or 3 weeks in there, where the trend chart, the daily charts are going one way, velocity is going the other way. So this is where you got to realize that when volatility is higher, you got to maybe focus just on the velocity, because velocity could really move things, and you can take advantage of those charts there. So let's just, based on this, let's just jump into possible trades ahead, and let's take a look at what looks the best.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with the charts here. I want to start with the dollar yen, because this is the first one that I had a lot of questions on. Because take a look at dollar yen, how quickly has come down to the support level, and the question is the dollar yen ready to even break lower and lower? So this is the daily chart. Let's take a look at weekly chart. You can see that this is an important level of support right here. I mean, last time we found support here was, at the end of 2023. So 141.40 is the next line in sand here. If it breaks that 141 area, you can see that then there is a lot more downside risk in this dollar yen. But where we are right now, $1.42, 142.46, we are pretty close to it. Now, if I go on a 4-hour chart, you can see that this thing did try to bounce a little bit here, and here we are all the way down. And this is what you're going to find. It's going to find that it's oversold and overbought territories. So dollar yen, it's an on the daily chart, it's not oversold yet, but on a 4-hour chart, it looks oversold. But let's just take a look at the currency baskets, because I want to take a look at, so the yen right now is where, if you take a look at the currency basket, it's in this overbought territory. It did start to pull back a little bit. And this is what I want to show everybody, is that how risk trends are playing along. You can see this morning, the yen was down quite nicely. After breaking out overnight, it actually down nicely. And right over here, look at that 10 o'clock. After the news events they're out of the way, you can see that this thing just took off. So this is just telling you how risk trends are really in play. I mean, if I can take a look at the chart for the S&P, and you'll see the same thing. Right around 10 o'clock is when markets start to fall apart. And it was around the same time the yen really took off. So this is where it's just working in tandem. So you have to really look at one to kind of gauge what the next move is going to be in something else. So that's really where we are. So at this point, it doesn't matter which pairs I take a look at, Aussie yen, they're all going to be overbought or oversold. So here we are. The next level support on the Aussie yen is 94. You can see that it came all the way, it stayed range bound for the longest time, and it just pulled back. So expecting some sort of base, like could be some pauses in between. Let's take a look at a 4-hour chart here. You can see that this thing was pretty one way. And that's why I know sometimes it's hard, because you're looking for some nice bear rallies. But in this case, only bear rally was here. And look at that very choppy looking base here. These are the tough ones to get. And you just have to, as Rob always say, sometimes the direction is so strong, you just want to get in. You want to pick an entry point. So at this point, realize that it is in the oversold territory. So I don't really love jumping on, even though the trends are pretty clear. I don't really love jumping on right now. Because why? Because the big moves, I think, has already happened. So what can we find in between? You can see that the all the charts are probably looking the same here. We got a big base on the Aussie, and then it's just break, and then another big nice basing pattern here. So this was a nice short. So I like the Aussie short here. So depending on what you want to pair with, we have the yen, we have the dollar, we have the Swiss franc. We have a few options here. Now Kiwi, well, you can see that this thing is looking similar, but this chart is holding it much better. So there could be if the risk trends does weaken, the Aussie can really weaken here. So even if you take a look at Aussie USD, it looks a very similar chart. Take a look at Kiwi USD, and that's a very similar chart. And that's what I want to highlight. I mean, take a look at an ugly day today. Yen is up very nicely, but look at that Aussie dollar. This was a better trade because it had the least amount of volatility. It broke out, a fake breakout this morning. It totally reversed, and then here we are ending lower. So this was a nice reversal off of that. That this was an easier trade. But now going to next week, if the yen takes a back seat, what is the Swiss franc was going to do here? So Aussie Swiss franc looks very similar here. So all these charts, you notice that they all look very similar. So looking for an entry point right now could be a little difficult because things are not really developing yet. But you have the direction in place, and all we got to do is look for some basing pattern or a bear rally, and those will be great setups to really short into. So after a big down move like this, you can see today it was quite volatile. I would expect things to kind of simmer down a little bit in the next 24 over the weekend. By next week, we'll probably see a little bit more calmer, and then see where it goes from there. Dollar CAD had a very nice little jump here. You can see that the dollar CAD seems to be bottoming out here. So maybe CAD probably looks like a better short. And again, let's take a look at Aussie against the CAD. You can see that this thing is breaking lower as well. It's very similar patterns. They're not the best looking patterns, but you can see a lot of chop and a big move. And then we can see the same thing happening with Kiwi CAD here. Yeah, so not the best. Now let's talk about Euro. So if Euro weakens, can we expect some moves in the Euro against the Aussie? You can see that this thing right now is just an uptrend here. So Euro on a basket looks weaker, but on this one, it's climbing higher against the US against the Aussie here. So same thing. Let's take a look at Euro against the USD. Yeah, like not loving the setup here. Now we can take a look at euro against the pound. Let's see. You can see that euro against the pound is kind of flat here the last week. The euro and the pound has kind of done a very similar thing. So question is, would the pound break out higher or lower next week? And I think this is where, if this breaks this exponential moving average 13-day, I don't mind taking a look at pound short. And if that's the case, we can go back to pound against the yen. Looks very similar. Again, this is where I can even lower my time frame because there's a lot of volatility in the markets. We broke lower, making a little base pattern here. So we can take a look at pound against the Swiss franc. Again, very similar pattern. Look for some bases to get into. And then pound, again, if there's a rally and there's some recovery, they look very extended here. Pound Aussie, he just broke out here. It's right up against the resistance. So this is where it could find a little bit short-term pause here. We have pound against the Kiwi. Again, pound just doesn't look the best here. So I think it's better to wait for pound to really break one way or the other to make that determination. And the last one would be Aussie Kiwi here. You can see that Aussie Kiwi. This is another, we'll call it relative side of weakness, where you're just following the relative weakness and they're very positively correlated. You're not getting a big gyration, but they're again consistently moving down. What's my next target? You can see that 107.50. Once it gets to 107.50, we might see a little bit of a flip there. But that's really the next level of support is. But till then, I think Aussie likely to weaken compared to the Kiwi. In conclusion, again, looking for markets, markets to stay volatile a little bit here. Currencies, again, moving on risk trends. So as we discussed earlier, very important to take a look at broader markets too. Look at how the US markets are opening up. And you can really capture a move and you see things happening in real time across the board. Just like today, when 10 o'clock hit, the equities plunges lower. Again, that was a big tell. And that was a big turning point in currency markets too. So focus on that. Yen and Swiss franc, they're acting as a safe haven currency. So as the risk trends are moving back and forth, expect some volatility in those currencies too. And again, if you want to avoid that volatility, it's best to pick something that's showing you lesser volatility. The volatility goes both ways. It goes in our way, it goes in our favor. You have quick gains, amazing. At the same time, you can get caught up in the wrong side of the trade and it really accelerate as well. So it goes both ways. So if you want to avoid, take a step, take a back seat, let it settle down, and then you can look for some better entry points to get into it. So that's the game plan. So thanks for joining here. Have a good weekend coming ahead, and we'll see you guys next week. Till then, take care. Happy trading.